Hi everyone, and thank you for tuning into my channel where I talk about stocks, the stock market, and investing. I post videos daily, so if this sounds like something you want to get more of, subscribe down below. In this video, I'm going to answer the question if Shopify stock is a buy. You're going to get the answer to that by the end of the video, so stay tuned. I'm going to use my simplified 6-step framework to analyze that, so let's get right into it. The first step in my framework is the customer value, and for Shopify it offers merchants an opportunity to build an online website and app, and for a monthly fee that starts small, relatively small, $20 to $30 per month, and it can grow as your business scales. So if you're starting off as a small business, you might choose the $29.99 option, and then as your business grows and becomes larger, you need more features. You can grow with Shopify. They have advanced features that businesses that generate hundreds of millions of dollars that are claim Shopify as their online website of choice. And additionally, Shopify charges a small percentage of sales. So you pay a monthly fee and a small percentage of sales, like 2%. So revenue has grown from 24 million in 2012 to 4.6 billion in 2021. So absolutely exploding revenue growth. It's evidence that merchants are finding Shopify services useful, and once they're signing up, they're sticking around because they're finding that it's worthwhile to stick with Shopify. Shopify's unit economics, it's an asset-light business model with gross profit margins above 50% for 8 consecutive years. That's a great sign. Its operating profit margin was 5.8% in 2021. 2021 was actually the first full year where it generated an operated profit. Up until that point, it was generating operating losses. Furthermore, it's recently investing aggressively in building out fulfillment services. It wants to offer merchants the ability to use Shopify's network to fulfill orders, so it can promise their customers, guaranteed 2-day shipping or guaranteed 3-day shipping. They think that merchants would prefer to have that, and so Shopify is bringing that in-house. They made an acquisition a few months ago for $2 billion. They acquired a company named Deliverr. That's not a typo. It's actually 2 R's at the end. And that acquisition and the investment in developing their fulfillment network could pressure profit margins in the near term over the next few years. So that's something investors should keep an eye out for. The total addressable market is another important step in my framework. According to Statista, e-commerce sales or online sales totaled 870 billion in the US alone in 2021. Keep in mind, Shopify is an international business which it has a presence in online sales internationally, but just in the US it was 870 billion in 2021. And in the most recently updated quarter, where this is when the most recent figures are available for, in April to June of 2022, online sales totaled 258 billion. So massive addressable market here for Shopify to capitalize on. Competition, of course, there are many businesses that offer similar services to Shopify, but not exactly the same. I've listed 4 here. They each have a unique spin on how they do it. Amazon allows third-party businesses to list products and sell on the platform. So does eBay, so does Wix, so does Etsy. They all offer merchants a place to list products for sale. So if you're looking to make online sales as a merchant, you can choose any one of those instead of Shopify. However, Shopify arguably gives businesses the greatest control over their customer relationships. That's one of the main selling points why businesses choose Shopify over the other ones, over the competitors. Um, but the good news for investors is that Amazon, eBay, Etsy are all raising fees they charge to sellers. So that means they're raising prices. They're not lowering prices to compete to attract businesses. They're actually increasing their fees, which makes the industry less competitive, which is more beneficial to investors. If they're all raising fees together, that means the profit margins for the industry are rising altogether. Neither of the companies are gaining an advantage by keeping their fees stable. They're all in unison raising their fees, some more than others, but the theme along these three is that fees are increasing. Good news for investors. The next step in my framework is valuation, and Shopify's stock is not cheap, selling at a price to sales ratio of 8.1. However, when you look at it relatively speaking, according to its history, Shopify is trading at arguably its lowest price to sales ratio going back all the way to 2016. 8.1 is about the lowest it's ever been. Still, I didn't use price to earnings or price to free cash flow because Shopify has only recently begun to generate profits on the bottom line, and there isn't enough history going back several years to compare its price to earnings to its historic levels. And so I chose to use the price to sales ratio. That is a bit of a knock on Shopify's valuation, that I couldn't use the price to earnings going back 5 years because it hadn't achieved profits on the bottom line for at least 5 years. The final step in my framework are risks, and the first risk that comes to mind with Shopify right now is the investments in fulfillment. They're spending billions of dollars developing this fulfillment network, and it could prove to be costly and wasteful. It remains to be seen whether it provides a sufficient return on that investment to make it worthwhile. Secondly, in the near term, consumers are spending less money online. E-commerce sales growth is slowing, and people are spending more money on away from home experiences like restaurants, theme parks, and travel. And so the diversion of customer spending from online channels to in-person activities could be a headwind for Shopify in the near term. Okay, gone over each of the steps in my framework. Let's look at the grade I would assign Shopify for each step. For customer value, I give it an A. It gives merchants the opportunity to start slowly with the basic plan and allow merchants to grow with the platform. Clearly, there was evidence that they are providing great value to businesses because of that exploding revenue growth we saw. The next step, unit economics, I gave Shopify a B+. It did become profitable in 2021. However, there is a caveat to that. The investments in the fulfillment network could ding profitability going forward. The total addressable market, I gave Shopify an A+. It's addressing a market that worldwide could be well over $1 trillion. In the US alone, it's close to 900 billion, and so A+ in that regard. Competition, I gave Shopify a B+. There is other businesses that are offering similar services to merchants, and those businesses are established, like eBay and Amazon, that have established seller bases. However, the industry is not competing on price. It's actually the opposite. The industry is increasing prices, and so that's good news for investors. Risks, I gave Shopify a B here. Elevated risks coming from the investment in the fulfillment network. It could be billions of dollars in wasted investment. And finally, valuation, I gave Shopify a B, even though it's relatively inexpensive compared to its history using the price to sales ratio. It doesn't have enough of a history of profitability to use the price to earnings or price to free cash flow effectively, and for that reason I gave it a B. Okay, after putting together all of the steps in my framework, Shopify stock is a buy. The factors that sway me to rank it as a buy are the massive total addressable market that it's addressing and the relatively inexpensive valuation, trading at a price to sales ratio at the lowest it's been dating back to 2016, and looking at the explosive revenue growth tells me that merchants are finding great value in Shopify's services. So for those reasons, I rank Shopify stock a buy, but let me know what you think in the comments below, and I'll see you next time.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.